Been down 8 of the last 9 days. It's a really good scene setter. As we bring in our panel, I'll begin with Dan Ives, who's sitting right next to me. What's the biggest issue? Because Christina highlighted what appear to be several. Competition, the debt, right? The CDS, China, margins, infrastructure spend. How do you deal with all those going in?
Yeah, first, I mean, competition, there's one chip in the world fueling the AI revolution, and it's Nvidia. And I think, worries about competition, I mean, we see it from every enterprise that's going down the path. The red phone goes to Nvidia, and I don't think anyone's looking at any sort of second and third options, even though down the road there's competition.
Well, what do you mean? The hyperscalers, as Christina laid out, they're making their own chips too.
But I think I continue to view that as 3, 4, 5 years down the road. For now, when we think about the first, second phase of the AI revolution, it's only about Nvidia. Now, when it comes down to the debt, what we're seeing in the markets, just worries about credit, I think it just comes down to investors, tech investors, are underestimating the scale and scope of the AI revolution, which is why it's so important in terms of as they show demand from Rubin, Blackwell, remember this all excludes China, this is what all of the tech sector is watching.
Could we really be underestimating the demand like this gentleman says? You agree with that?
I do agree with Dan on this, and if you think about what the hyperscalers have talked about in terms of how much gigawatt capacity they want to add next year in 27, the big four are talking about 20 gigawatts of capacity. And to put that into context, $50 billion per gigawatt is the CapEx load for these hyperscalers, right? So that's $1 trillion in CapEx. We also have Elon Musk talking about 10 gigawatts that he wants to bring on. That's another 500 billion. And so if you kind of do the math, about 60% of that CapEx goes to chips. There could be upside to Nvidia's numbers next year, maybe 10% or more.
And physical AI.
The question is, why has this stock gone nowhere, even when its forward PE is just above 20 times? That's the lowest going into an earnings report in 5 years. What's the problem with the stock? The company, I don't think anybody disputes what the company's doing, what they're going to deliver tonight, and what Jensen Huang's going to say about all of it. But where's the disconnect?
Considering the last few years, what I'm about to say actually is quite weird. NVIDIA's not exciting. NVIDIA's not exciting as what we've heard from Micron. That's the new kid on the block. That's where the momentum is. What I look at as a portfolio manager and running several portfolios is that NVIDIA has been incredibly stable in terms of its consistency with respect to not only earnings, it's the epitome of the earnings-driven market, but more importantly, when you're running money, it's been very consistent in terms of what its weighting was in the market December 31st to today. Very different across the spectrum that you're talking about chip stocks. So as an investor and you're looking at consistent fundamentals, it's weird to say that NVIDIA is not the exciting stock anymore.
Well, how do they get it back? How do they get that mojo back?
Well, they're going to get it back. Part of it is tonight. They shot across the bow, in our view, was the consortium with respect to putting that together on the debt side. Very clear, consistent, and how they were going to get the money. That was lacking in what Oracle was doing, and that's part of why Oracle was in the penalty box. So that was shot number one. Shot number two is going to be earnings, and then number three, Scott, is the focus on guidance for 2027. It's going to be really important.
I'll tell you, Bryn, I'm glad we have you because you appear to me to be, at least in this group, the most, if you even want to use the word, cautious on the near-term direction of the name, where you say 230 or so-ish is a ceiling, and that this report's not likely to do anything about that. Why?
No, yes. I mean, 230-ish is the ceiling. I mean, the stock last year is up 15%. So, with no context, that's fine. But with the earnings and revenue growth, you're not only going to see tonight, but we're going to continue to see this massive earnings and revenue growth. It's like people aren't asking enough of the tough questions. So back to, I think it was Doug, about the 20 plus gigawatts of next year. Well, where that falls on its face is that 60% of the data centers that are supposed to come online in 2027 haven't even broken ground. I'm in Texas, and with what Abbott's doing, obviously the midterms, you're not getting a new data center lease anytime soon. And so there is this logjam, and he needs the whole group needs to walk through. Well, you can have all this demand, but if there's no data centers being built or not the capacity, well, then what happens there? I think also this $500 billion consortium just like we have with Iran, is a memory of understanding, and it's very vague. And I think that the market is telling us we kind of question all this, because you have to say as an investor, well, what could go wrong or what could take longer? And to me, with 21 analysts, 20 all bullish, I think average price target is 331. I just always respect the market, and this company's earnings crush it. Jensen is like $1 in a billion. But the market's saying just like enough, and we have more questions that I don't think anyone's really answering yet to have a catalyst tonight for this stock to actually go higher.
I mean, you might as well be Dan Ives, the president of the Nvidia fan club. I mean, how do you respond to that? And by the way, that's not a bear. That's not somebody who's negative on the company. Brin's owned the name as long as I can remember,
Totally.
and is positive on it, but still can't escape what appears to be the obvious to people who question what the stock isn't doing.
I think there's two things. I think Belsky hit it. I mean, are there shinier objects maybe in the near term? The view Micron, all the memory plays and whatever. But it comes down to like investors, probably by 30, 40%, I think are underestimating the pure demand and scale. Because I just see it from an enterprise perspective. You have less than 5% enterprise that have truly gone down the AI path. And this doesn't even include physical AI. And then there's only one godfather of AI, and as Jensen shows it quarter by quarter, I think we're going to continue to look back at this period and say investors are maybe going through this sort of gut check moment. They will prove it. We are in the third inning, maybe bottom of the second inning of the AI revolution.
I mean, Malcolm, the shares have declined in each of the last 4 sessions following the earnings report. What kind of expectations do you hear? What are the biggest issues in your mind after hearing from everyone on the panel?
Yeah, I think Brin is probably right. NVIDIA's earnings report is probably going to do more for its competitors than it does for the company itself. The two exceptions that I see here, we got the rumors about the possibility that NVIDIA is going to increase prices on its customers by about 15% to make up for their own demand shortage issues with memory. And that could actually lead to some pull forward that we hear in the guidance for the next quarter and the quarter after that. So it's very possible that the street could hear really strong guidance numbers above and beyond what we were already expecting. That would set the stock on fire. Also, we could hear Jensen Huang tell a story about how some of those early investments in spending money to help build up its next customer are starting to pay off and helping them become less dependent on Microsoft and Meta as their two primary customers at the moment, which does start to help relieve some of the concerns I heard initially about their competitors already having success building competing chips and sort of weaning themselves off of NVIDIA. So if we got either or both of those, a strong case in that direction, both of those could be catalysts that send the stock beyond Brin's 230 target. But I do think that it's probable that the street responds with a yawn on NVIDIA and sends up the shares of a lot of their other competitors.
What about the idea that you can be right in the near term? And this was a very big orange that we've had, but there's a lot of juice that's been squeezed out of it, and eventually you're going to squeeze everything you can get out of that, and the time frame for when that happens is unclear. Wall Street Journal today writes the following, quote, ultimately Nvidia and other AI chip makers are living on borrowed time. At some point, big spenders will reach a breaking point where their cash piles are smaller and they're unable or unwilling to raise more money from debt or equity investors. If AI turns out to be worth less than it costs, that is inevitable. How do you respond to that?
I respond that you don't have full equilibrium from a chip perspective and demand probably till late 2028, 2029 at the earliest. And I think it's one where there will be nervousness in terms of the spending cycle, but this is going to go on, we believe, for the next 4 or 5 years. We will go through these gut check moments, and as Doug's talked about, we are still early days as it plays out and as the execution plays out. And I think when you think about physical AI and the future of what I view what the AI world is going to look like, it's 1955, and you're building the Vegas Strip to where we are today.
How do you respond to that, right? That there is some degree of inevitability to all of this, and all of you are the ones who are left trying to game that out and figure out what the real timeline is going to be.
I think it's true of any investment where if the consumer demand changes and you're building supply to meet demand and that changes, that's always a risk for anything that you might put money toward. As it pertains to AI, at Intelligent Alpha, we do use and we rely on these models to do our investment analysis, our portfolio management. And I can tell you sort of from the front lines, the last couple of weeks, we have had inaccessibility to even use some of the models because they've been beyond capacity, more than we've ever seen since starting the company 2 years ago. And so the demand from a consumer and enterprise side is still very healthy for these models. And to Dan's point, I don't think that's going to slow down at all in 27, probably not in 28, so we need to keep building into that.
The issue of the buyback, I think, is interesting. All of a sudden, we're talking about it more.
Yeah.
People are saying, well, they could do this. They could become an Apple-like company that has just a massive buyback, which has, in some respects, put a floor under the stock. Bank of America talks about it today. They say the balance sheet, not the beat. That's the real tell. A better commitment disclosure caps the perceived liability. And a buyback pivot toward Apple-style payouts is the underappreciated catalyst to re-rate the stock, trading at a depressed multiple. I mentioned to you going in, we are at a forward PE of 20. That's the lowest going into earnings in some 5 years. You want a bigger buyback?
No, we like it. We like when companies buy back. And these guys can correct me if I'm wrong, but if you go back and look at semiconductors, traditionally, when they buy back stock, it's already over for them. Meaning in 10, 15 years ago when you had Intel and Texas Instruments in particular became dividend growth machines. Nvidia is not going to be becoming that. I think more of a balanced side of things and what they're doing with their balance sheet provides a lot more credibility for their longer term growth. And again, going back to the word that I used before, consistency. It's going to really help their overall operations.
Bryn, how about you? Do you think a bigger buyback is the answer? Do they need to become more Apple-like in that regard?
Well, Apple's not spending and not doing all of this ecosystem build out like Jensen. So I think it would go a lot to assuage investors of, hey, we're going to do a buyback. We see value in our shares. And I think Nvidia's never been like Intel. So I agree with Brian. A lot of times buybacks are a peak, but I do think it signals stability. And so, I mean, I think that would be a great signal. Instead of doing these $500 billion MOUs, whatever, that they're talking about, buy back your shares and just do something straightforward that we can all get our arms around, decrease your share count, and just go a little bit down that glide path. I do think the market's just overwhelmed with all of these numbers. You can't ignore the circular financing, whether it is or isn't. There's just too many unanswered questions. And I still go back to the power. It's like you can't create power without electricity, and like that's not coming online. That is still such an unanswered question that everyone kind of, not on the panel, but the market just like whistles past like it doesn't really matter. You can't just create electricity. And so that to me is going to be the next air pocket, is when this intersection comes together of all this purchasing, but there's no electricity to stand it up.
That's the other issue, and it's been mentioned it's some cases directly here, but also around the periphery of this story, the data center backlash. And I'm wondering, Malcolm, how you see that, whether you think that's been a direct weight on this stock, and whether it's going to continue to be that way for the foreseeable future, at least until we get to and through the midterms.
I do, and that's exactly why I'm not interested in owning Nvidia for a buyback. You want buybacks, go buy Apple. I'm more interested in seeing them take $50 billion of free cash flow, and instead of now investing in startups that will turn around and buy their chips, that game is played. I think they should innovate their way out of this rut that they have found themselves in for the last few quarters. I would love to see Jensen find the next parade and get out in front of it, because the edge is really where the next phase of compute is. It's actually on the device itself. It's no longer in the data centers and in the cloud. I've been saying for a while, to the point that one of the folks on the panel was making, what happens when all of a sudden demand starts to wane because we figured out a new solution because we were so supply constrained? We've seen it with China and DeepSeek already. So I think it is incumbent on NVIDIA to figure out what is going to be the next wave of innovation that they can supply semiconductor design to, whether it's autonomous driving, whether it's robotics or something else. And these are all places where Jensen already has his tentacles into. And so I'd really rather just see them spend all of that cash pile that they have coming in quarter after quarter on building out those areas instead.
Is this data center debate some degree of existential threat to this story, at least in the near term? I didn't hear you mention that at all?
I think the biggest risk to the AI revolution is the politicalization of it. As we get into midterms, data centers are the hearts and lungs of AI. So for every data center that doesn't get voted and you ultimately have to go to other states or whatever, that's something that constrains AI.
But aren't we trending that way as we speak?
To Bryn's point, I think we still, if I look from a capacity perspective, even if 30% of them got voted down, we still don't have equilibrium until 2028, 2029. Now, the longer term story, if that becomes, especially in the midterms, that's why this is a battle between big tech and the Beltway. But big tech, they're really the ones that create a lot of this PR problem to begin with, given a lot of the sort of negativity, taking away jobs and electricity bills.
Are they doing enough to turn the tide? I mean, and frankly, I don't know what it takes to do that. Save for, as I mentioned yesterday, Jensen Huang going on a barnstorming tour of America, singing the virtues of data centers.
Yeah, I think they've started to change their tune. I think, is it too little, too late because of the political arguments? Yeah, but the reality is that for the first time in 30 years, U.S. is ahead of China when it comes to tech. And we can't, the politicalization of it is, right? I mean, that continues to be a danger.
All right, guys, we got to leave it there. We're going to see what happens in a little more than a half an hour. And then we'll talk about it certainly on the other side of that. Everybody, thank you so much for being here and part of that